What's up, penny boys and gals? It's your boy, What the Duck here, and it's time for another trading class video. Alright, so yesterday we went over some of the basics of trading call options. Next week we'll be going over the Greeks in detail, as well as implied volatility. But tonight we'll be going over hedging. So if you want to check out our prior classes, then check out this channel, WTD Penny Boys, and subscribe so that you can be notified when future classes are posted. Also check out my Instagram, my Twitter. I'll be posting some stock tips and tricks, as well as some free alerts on that Instagram and my Twitter. And you can find all that on the screen, as well as my YouTube. And if you want, you can follow my stock twits and my Facebook account. But definitely follow that Instagram, Twitter, and YouTube. Those are where all the tips and tricks will be posted. Also, if you want to get in on our class discussions, check out discord.gg/pennyboys. There you'll find all of our past classes in written form, our trading homework, stock alerts, cash giveaways, and so much more. So let's just get right into it. What is hedging? Well, hedging is a way to protect your investments or portfolio. One common way that hedging is used is to offset losses, meaning taking an opposite position of your option or stock. The easiest way of understanding what hedging is to think of it as insurance. When you decide to hedge, it means that you are insuring yourself against downside, or events, news, earnings that can negatively affect your investment. But just like car insurance doesn't prevent you from getting into a car crash, or homeowner's insurance won't prevent a tree from falling on your house, or even how health insurance will protect you from breaking your arm. And if you live in America and you're part of the 51% of Americans who don't have health insurance covered by your job, well, then health insurance probably won't protect you from going broke from one hospital visit either. That is if you can afford that scam. I mean insurance, but I digress. Anyway, hedging cannot prevent negative things from happening to your stocks, is what I'm trying to say. But it can help reduce the impact if it were to happen. Unfortunately, hedging is not easy. It's not as easy as buying an insurance package that will cover you for the year, like with health insurance or car insurance. Hedging in the stock market requires knowledge, strategy, and risk management, because just like anything in the stock market, there is risk involved, which is why it's a good idea to practice hedging, trading, options, day trading, having a trading plan, and anything stock market related on a cash account first before using your hard-earned money. So, in stocks, the only way to use hedging for one of your investments is by buying another investment that has a direct or opposite effect on the stock or investment that you're trying to hedge. So what I mean by this is that, in theory, in order to hedge, you have to pay for one stock or put or call that does the opposite of the stock, put, or call that you are hedging or trying to protect or insure. So for example, let's say that you bought stock ABC and you plan on holding it long. Let's say the ABC stock is a 5G stock and you think that long term that's a great investment. You want to get in early, but you're worried that it might have some dips before going up again. What you can do is buy a put option, which earns money when the stock goes down. So by doing this, you are protecting your investment from dips or drops. However, hedging isn't that simple. When you're reducing your risk, you're also reducing your potential profits. So in theory, hedging is a conservative way of investing because it reduces your potential loss. However, it also reduces your potential profits. It isn't, however, used to maximize your potential gains. So it is not used to maximize your potential gains. So before you decide to use this technique, you need to ask yourself, is the potential benefits worth the expenses? Just like with health insurance, a lot of people opt not to have health insurance. Sure, this is risky, but they think to themselves, man, the $200 per month that health insurance costs, it's just not worth it for me. I'm not going to break a bone. I'm healthy. I'd rather take the risk and save the couple hundred per month than spend it and be insured. That's risky, but in theory, buying health insurance is also risky to your expenses, to your bank account. So it is all about what you think the chances are of you using the insurance policy. Or with hedging, what you think the chances of are of you needing to hedge the stock or option that you are in. So, like most things in the stock market, if you choose not to use the technique or hedging, it's still good to know and it's still good to learn. That being said, the stock market has a lot going on. So don't stress yourself out. It's good to master a few techniques as opposed to trying to learn everything all at once. A lot of new traders hear about candle patterns, indicators, hedging, options, ETFs, and the list goes on and on. And they want to learn it all in one day, or 1 week, or even 1 month, maybe even 1 year. That's not how trading works. It takes time, and it takes patience. Set a goal for yourself, not just in trading, but also in what you plan on learning in trading. Maybe in 1 week you want to learn about moving averages and really get that indicator down. And the next week you can learn about VWAP and MACD. The more time that you spend on each topic, the better you will become at using it, and the more you will retain, as opposed to trying to rush through everything and end up not being able to retain anything. That is what we're going to be focusing on in the upcoming PBU courses. These courses will be organized in a way that is geared towards not only helping you learn about stock trading, but also retaining this knowledge. There will be notes that I'll be sending to everyone, homework, quizzes, and of course the opportunity for one-on-one help if you find yourself falling behind. These courses are planned to start mid-September, and up until then I will still be making these beta classes going over certain trading related topics. But the official PBU classes are going to be much, much, much more in-depth, detailed, and geared towards step-by-step learning. They will also be available only to premium members of Penny Boys, so make sure that you join us at discord.gg/pennyboys. And if you already are a premium member, then join us in the PBU. It's free for Penny Boys premium members. And not only will you get these trading classes, you'll also get stock alerts, cash giveaways, a great trading community, live stream trading, and so much more. So I'll be answering any questions about this class or any prior classes or just anything in general in the PBU area of our Discord. So I hope to see you all there at discord.gg/pennyboys so that you can join me, What the Duck, and together we can all make some bread.